Okay, so good evening, everyone. We're sitting Sunday afternoon, or should I say Sunday evening already, 28th August, and what we're going to be doing is a bit of a trading plan for the week, showing you, number one, what's happening in the economic calendar this week, some really important stuff I think you might find some trade ideas from. Number two, talking about some major news, and then number three, quite a big trade idea on a weekly time frame, technical based, fundamental based as well, and obviously very strongly driven, well, soon should be very strongly driven by some really important data. So as you can see, we have finally gotten the webcam fixed. Need to fix up the graphic quality a little bit, but we've already gotten that fixed. We're going to get a few other things going soon as well. Might get a better webcam for live streaming as well, which we're going to be doing. So lots of important stuff coming up, but let's jump into this. So let's start off with the weekly trading plan first. Once again, everyone, you will make sure that you can find this plan downloadable in the description below. It'll be a Dropbox link. You can go straight into our Dropbox, download the plan. You can download all the previous plans we uploaded. So all the way, I think I've got from July week 2 all the way up until now, so you can have a look at all the plans. Also, you can have a look at our YouTube page as well, and have a look at the previous trading plans that we've uploaded. But what we're going to be doing is just having a look at the economic calendar coming up. So just to let you know, basically what we do is, my name is Morgan. I am the director of MS Equities Trading. We teach people how to trade, invest, manage their wealth properly. But what we also do is we run an investment group. So in my investment group, I manage a portfolio for institutional clients. I don't trade for retail clients. And what we do is we move this portfolio through the financial markets, trading forex, derivatives, commodities, and sometimes we trade physical stocks as well. I also do trade indices as well. And I have a team of traders, including myself. We analyze the market every single week and we find alpha. We find ways to make money. And what we're doing as well is we're translating this back into our students to show our students what we're doing every single week. So part of this trading plan is also what we use to make money off every single week and to produce a return for our clients. So we're also showing you this information as well, so you can make use of this information and also profit every single week. Most important thing to start off with is, number one, have a look at what the economic data is coming out every single week. Now, if you have a look, great example for economic calendars coming out is my FX book. Yes, there are a few other Forex calendars that you can use out there. Well, it's not really a Forex calendar, it's an economic calendar showing all of the economic releases over an entire week across the world. Best way to do it, make sure to filter high impact and medium impact. We don't necessarily trade low impact events. Make sure all of your currency pairs are selected, click save, and it is going to produce all of the economic releases coming out. This is very important. If you are trading or if you are looking for things to trade, these are going to be the major events that are going to impact your trades either positively or negatively. So what we effectively do over here, we show you what you should expect in the three major markets, British, Euro, and US. And then we talk a little bit about some of the things you should be expecting. So starting off, British markets, we have a very slow week coming up. There's going to be 3 medium impact events, followed by 1 high impact event. So starting off Monday, we've got public sector net borrowing. Wednesday, we're going to have a very high impact event, the inflation report hearings, which is going to be very, very big. Right at the end, we'll explain why. And then on Thursday, we've got the GDP quarter on quarter and the GDP year on year. You also find that's going to impact the market quite strongly. It's going to impact the FTSE as well as some of the indices and stocks that will be affected directly by the GDP numbers. Obviously, the whole of Britain will probably be affected by it. Leading into US markets is going to be seeing a busy week ahead. Please note as well, we do feel the Jackson Hole Symposium might land up being a bit of a non-event in terms of they will be meeting over a 3-day period And in terms of what sort of news reporting is going to be coming out, it's not like they're going to have a podium where they're going to be presenting all of the massive policy changes or policy change ideas they might be talking about. But the Jackson Hall event is also going to have President Draghi from the ECB giving his speech, which is probably going to relate very closely to dealing with inflation problems as well as quantitative tightening, which is obviously the talk of the town in the US right now. So in terms of that, please make sure to also follow the EIA crude oil stocks change release coming out on Wednesday. If you would like to also have a look at that information coming out, please make sure to have a look at our YouTube page, where on Friday we uploaded a video showing you exactly how we traded the EIA crude oil stocks change release. I'm just going to throw it up for you here quickly, so you can see over here trading EIA crude oil stocks change live trading as well. So in that video, I actually got stopped out of my position, re-entered on contingency plan number 2, explained in the video. I managed to make quite a good amount of profit, and I've been able to hold a few of my positions as well going into the close of the week, which we saw the end of this week basically go back up to where price fell from 2 to 3 weeks ago. So I'm very happy with that trade as well. But please make sure to follow that news, because going into this week, it's obviously going to be very important to see if they continue production cuts or if there is a pullback and production actually rises slightly. So over there you can see there are a few medium impact events and a few high impact events. Link as well to, if you would like to watch the video, that is linked over there as well in the YouTube page. In terms of the euro markets, the euro markets will be expecting a relatively normal week. In terms of what happened on Friday, very, very sad to hear. My deepest thoughts go out to the families and the people involved in the Spain terror attack. But unfortunately, that is probably going to cause a strong slump to the euro markets going into next week. You're probably going to see people pulling a lot of their money, and you're possibly going to see a very delicate move back into the market. So in terms of any serious bullish moves, it might not happen, but obviously a strong recovery, if there is a possible large sell-off, is going to be seen. So in terms of that, please make sure to identify that going into next week, things on the euro market are going to look slightly different and possibly aren't going to work out as well as we expected. So in terms of trading, the German securities such as the DAX on the intraday frame is going to be pretty good in terms of the GDP news coming out, as well as trading the rest of the major impact events. So going through it, we've got obviously market manufacturing PMI coming out of France, market manufacturing PMI coming out of Germany as well. As you can see, there are 6, 9, 11 releases coming out just on the German market. So obviously anything on the DAX, like I said, and anything on German exchange traded instruments are going to be really good to trade intraday and medium to long term as well. So in terms of the economic calendar, we also have it up here. Please make sure to go have a look through. So basically in this economic calendar, every single day, I'm just basically showing you the major events. I'm talking about the event details, what you should expect, and then I give my personal comments as well, what we're probably going to be doing during that event, and how we'll be looking at either making money off it or staying away from it or protecting our current positions as well. So you can see that's going all the way through Friday to Saturday as well. And now for the juicy stuff as well, some of the major news coming in this week, obviously. Oh, no. My mouse is on a roll. Come on. Okay, there we go. So, world news. Obviously, big world news coming in right now is the terror in Spain. Unfortunately, there was another big terror attack in Spain. On Wednesday, funny enough, from what the speculative news says, obviously it is reliable data, there was an accidental explosion of a whole lot of, I think it was butane tanks, and what had happened was a massive house had actually blown up, or storage area had blown up, that was filled with these butane tanks, and little did they know that was part of a plan that these terrorists were plotting in order to make a bomb and obviously go and injure a lot of people. So they kind of ditched their plan and actually got in cars and started ramming down people in Spain in a very a busy tourist attraction street. Unfortunately, I do know there are confirmed people that have passed away and people that are seriously injured, and I think there's up to about 50 to 60 people that are injured right now as well. So obviously it was a very big event. It was terrible to hear about, and you're going to see it's going to affect the euro markets a lot. Second one coming out on Reuters, this news coming out was talking about the largest sell-off in the last 3 months across the Dow and the S&P 500 together, and obviously a lot of analysts who are constantly bearish the markets, so I wouldn't necessarily take their information too seriously, but a lot of them are saying maybe this is the beginning of a market correction. A lot of people have been expecting a market correction from the Trump rally, as they call it, from the day that he was elected back in November. So in terms of a correction, possibly, obviously, if that correction is completely rejected, you're going to see a strong retracement, and we'll probably make our way back to previous highs in the Dow at 22,000 points. So obviously that could be a trade idea. Article listed, make sure to have a look at it. In terms of the Fed, obviously the Federal Reserve is currently unstable regarding Yellen's speech coming up. Obviously she is going to be talking about the sagging US dollar in terms of inflation rates and interest rates, and as they said, they are going to probably increase inflation rates slower than expected, but they do know coming up, I mean, we're already sitting on the end of the eighth month of the year. We only have 4 months left in order to tighten these interests. We only have 4 months left in order to begin quantitative tightening and try and increase interest rates. So obviously every single thing that Yellen is talking about and every single thing that the Fed is looking at doing is being watched very closely, because now our time gap is basically getting closer and closer and closer to whenever it might happen. So in terms of what she might say in the article, they explain it really, really well. And that is the end of that as well. There is some news going up. But now going into the trade idea that we have. So it is a weekly trade idea. So to some of you who might trade intraday, scalping, order stacking, catching small pips, you're probably not going, you're probably not going to be interested in this idea. But in terms of what could be a good technical based and fundamental based idea, you would probably like this as well. So in terms of what we're currently looking at is a trade idea on the Euro British Pound on the weekly time frame. So for myself, I am actually also in this weekly trade as well, but I have hedged my position quite strongly. So what that effectively means is I have short sold the market, but I also have gone long, given the fact that I know we might be piercing through multiple different zones that I'll talk about now. So in terms of, if you have read through our previous trade plans, we have been talking about this trade as well as a possible idea. But in terms of what we're currently looking at, I think a big one is the British pound has slid for the third consecutive week versus the euro. The pound has weakened versus a lot of other currency pairs, and what you are seeing is slowly but surely the Bank of England is going to find the next biggest last-ditch attempt to recover the pound. You are going to see that going into the end of the year. We're going into 4 months before the end of the year. We're going into the end of the third quarter as well, which is really important to identify. And the fact that we all are also going to be hitting the end of the fourth quarter in the next 4 months, that's also very important to identify. They are trying to make sure they're coming out on top, that they're looking good with what they currently need to have in the British pound right now. So in terms of what the current slide is showing, technically as well, we're entering what we call desperation zones. And these desperation zones are going to obviously see the pound want a very, very strong retracement. And what you see right now is the pound euro, or the euro pound, has been extremely overbought. It is extremely overheated, and there is a very good chance that we're going to see a strong retracement, as has been seen multiple times before on nearly 7 different occasions. Okay, so basically what you can see on the trading plan, we're saying, as seen on the current chart below and on the next page, the current chart represents euro pound currency, representing 4 separate technical resistance barriers. So we have 4 technical barriers, what we're calling zone 1 through to zone 4. In terms of what we are possibly having a look at as well, is the mid to long-term take profit opportunities, as you can see further down here as well. As seen below, there are 4 separate resistance zones identified, with zone 1 being the least extreme resistance area and zone 4 being the most extreme resistance area. Should price move higher, with each zone it passes through, there's going to be a higher probability of retracement. So that is also going to be something very important. With each zone we are passing through, it's becoming more and more extreme that we're going to see a strong retracement at some point in time. And in terms of the other technical barriers we've had a look at, the numbers indicated above on the spike areas. So you can see there's spike areas over here. So, 3 and counting, 1, 4, 6, 5, 3. These are effectively the candlesticks, the weekly candlesticks that have been counted that have closed above the resistance level of zone 1. So zone 1's resistance level is this very lowest horizontal resistance line drawn in blue. So every single candlestick that is closed above this line has been counted in these numbers. So what you can see right in the back here, the absolute biggest spike on all of these 4 resistance zones was right back here, where there were only 3 candlesticks that closed above, then followed by five candlesticks closed above after moving back below the resistance areas, then 6 candles, then 4, then 1 after moving right back below the resistance area, and then again 3 candles, and now we are at 3 candles and counting, which is also a very important thing. So we are currently above and moving into zone 2. So zone 2 is probably going to increase our probability of a short opportunity on the euro pound. So this is an average of 3.57 candles per all 7 occasions that we have seen a spike above zone 1. So the possibility is, after we go beyond 3.57, we're beyond the current average, and at any time we pierce to the level of 6, we're at the maximal number of the range. So the highest number of all of these resistance tests of spikes is 6 candles closing above the line. The second we hit 6 candles, then we are effectively at the limit of the range for the previous 7 resistance tests of all of these zones, which is going to be very important. So 3.57 is going to be the average number, and 6 is going to be the maximal limit number. Okay, what I've also said, we have been monitoring price action on MFI and stochastic very slowly, very closely identifying a strong level of entry point. This is a very clear identification that price action is drastically overheating and has become overbought. So this is very important. If you understand what the MFI is, it's called the money flow index. Please make sure to research it. I'm not going to explain it. And the stochastic as well. Please make sure to research it. I'm not going to explain it. When MFI and stochastic shows extreme levels of being overbought on something like a weekly time frame, that is extremely serious to have a look at, because if you have a look on, let's say, an hourly time frame, your MFI levels can be extremely overbought, but the price can continue to move higher for a very long period of time. But if you have a look at where your MFI has been extremely overbought on weekly time frames, price has usually almost always reverted to retrace beyond at least 20% of that bullish spike. So that's also something very important to identify in terms of using technical indicators for your trading strategy, in terms of identifying if you are at the absolute limit of being overheated. If something is overheated, the orders will dry up, people will begin to take their profits, and they will turn direction. They will short sell this currency pair. And that is exactly what you're going to see. And as we go through all of these 4 zones, you're going to see people are going to have more and more and more sell orders triggered, because they're expecting price to move back down below this zone, as we are expecting as well. So in terms of our expectancy, we are identifying that we are possibly going to see a strong retracement from zone 1 through to zone 4. We're not sure exactly which zone we might retrace into, but something we are also doing is that we are focusing on hedging our position as well. So in terms of, let's say, if I put in a sell order at a certain price on the euro pound, I'm going to put in a buy order as well, expecting that it could possibly continue to move higher. And that buy order is basically hedging out my position, creating a level of insurance, meaning let's say I'm down $20 on my sell order, I'm going to be up $20 on my buy order if I enter it closely towards the spread levels of each buy and sell order. So that's also very important, that I can actually hedge my position, because I'm not entirely sure what level price may move to before it retraces. So obviously hedging my position is going to be very important for this opportunity, because there is a good chance that we might have 2 to 3 more candles of bullish moves before price retraces. So that's going to be something very important that we need to identify when we're trading this opportunity. So in terms of just having a look at the trading platform, so over here you can see we are on the weekly time frame for the euro pound, and basically what we're having a look at here is zone 1 through to zone 4. So as you can see here, we have zone 4 right at the top, which is the most extreme level, zone 3 being less extreme, zone 2 more less extreme, and zone 1 being even less extreme. So as you can see here, we have 7 different times that price has broken zone 1 level and moved higher, followed by a retracement back down into these levels. Almost half of the opportunities have retraced all the way down to this level. So let's actually have a look. So opportunity number 3 never retraced back to the level, it retraced 50%. Opportunity number 2 retraced, 3 didn't, 4 did, so those are 2 opportunities retracing beyond this level. Third opportunity retraced and fourth opportunity retraced. So 4 out of 7 of the opportunities retraced straight to this level. So this red support line right here, 4 out of the 7 opportunities of retracement have retraced to this level. So what do we know very clearly? There is a very good opportunity that price is going to retrace directly to this level, and the probability is over 50%. So there's almost nearly a 60% chance that price is going to retrace to this level, given the last 7 retracement opportunities, or 6 retracement opportunities. So given that it's 6, it's actually over 70%, because this is actually the 7th occasion. So 4 out of 6 times, that's actually over 50% of the time price is retraced back to this resistance level. As you can see here, obviously price has used this level as a strong support area, but obviously watching for it to break below this level could be a possible opportunity to add to your position or re-enter on the position, but that is completely up to you. For me, if it goes back to this level, I'm going to set my stops and let the market play out for me. I'm not going to try and watch for the market to move back low and try and hit some massive home run. But obviously that opportunity, if the fundamental news does come out strong enough and we do see that price can move back down to that area, obviously we would take the opportunity if it presented itself. But what I'm watching very closely is for the MFI and the stochastic to start showing some level of bearish move before I can enter a lot more stronger positions. So in terms of this opportunity, what I've effectively got is I've got an entry on sell orders just at the limits of zone 1, and obviously those sell orders have entered into a loss. I've got some buy orders open to hedge those positions as well, and I have sell orders waiting, so pending orders waiting at sort of 61% of the level of every retracement zone. So I've got one at this resistance area, I've got another one at this resistance area. So if we find some level of spike that actually goes to trigger those levels, obviously that's exactly what I'm waiting for, because on this point over here, so this last retracement zone, we had price spike on just a single 4-hourly candle that spiked all the way up to the resistance line of zone 3 and the support area of zone 4, and price moved straight back down. So in terms of triggering my orders, I'm going to use automatic pending orders just to make sure that I'm able to trigger those opportunities. So obviously this is a very big trade opportunity, because if we have a look at price moving back down to this area, we're looking at anything between 800 on zone 2 to 1,100 on zone 3, and anything up to 1,500 on zone 4. So anything between 800 pips up to 1,500 pips profit on a single position. So obviously a big opportunity could be to try and see if you can get sell orders on these limit areas here if price does move up to that area. Obviously we're not entirely sure if it will, so entering your positions early and hedging them could be something that would work, but obviously that's completely up to you. That's what I've done for myself. So I've entered early, hedged my position. If price moves back up into this area, I'll close the hedges out in profit and I'll reshort my position for a little bit more, and I'll basically hold those positions all the way down back to this resistance area. Obviously there might be an opportunity for price to bounce off of one of these levels, but if price does bounce off of those levels, I'll make sure to protect my profits, take majority of it off the table and leave the rest to run. Because in terms of this opportunity, this is going to be a very big opportunity in order to trade based on the fundamentals and the technicals as well. For the fundamentals, it is a lot of information I'd have to go through right now, so I'm not going to analyze it. The video is already going on for a bit. We might come out with another video talking about exactly what fundamentals we have to look at. But in terms of the information that we have used to find this data, using Reuters.com for most of our business news has been the one that we have used. So in terms of the article on the stock rally for the US market, this is the article. It's linked below. For the Spanish attacks as well, stability concerns for the Fed ahead of Yellen's speech, as well as sterling set for third week loss versus euro as outlook darkens. So that is part of one small part of the fundamental analysis we've used. If you would like to have a look at what sort of opportunities we've traded and how we've done, obviously if some of you are going to have a look for if we've been able to make some good profit, you can see I've got on my FX book, I link up all of my closed trades to Twitter, so you can also have a look at how we're doing every single day. In terms of if you want to find out, if you want to watch any more of our trade videos, please make sure to have a look at our EIA crude oil stocks change release, as well as August week 3 trading plans. There are some really good trading plans in there as well. And also in terms of if you would like to find out more about what we do, once again, like I said, we teach people how to trade, invest, and manage their wealth. We run an online academy where I train students from around the world. I teach them how to do what I do, and I also give them the opportunity to be able to work for me as interns or work for me as ambassadors and actually earn money while they trade. So for any of you who are interested in doing that, please make sure to have a look at our training page to find out how we do what we do. And right down at the bottom of the page, there'll be a button where you can apply to our training, and you can find out more about our training academy as well if you'd like to. So we've got two different courses available. It's all to the same Access Academy. One is through a normal access and one is through a scholarship access. If you would like to access directly as a scholar, you have to be under the age of 25, and you have to be able to write a justification letter to me talking about exactly why you deserve to be a scholar inside of our academy and why you deserve to become part of our team. In terms of the MSc Academy, we charge out $495 for 12 months worth of training, private coaching, as well as full access to our mentorship program, private coaching program, and our weekly trading plans. Our MSc scholarship, you get the same thing, it's just at a huge discount as well. You can click down below to apply, and you can also take advantage of having a look at our page on working for us as well. So once again, everyone, hope you have an awesome week of trading. Hope this information worked really well for you. Let me know down below what you thought, and if you have any contrary or interesting views about what we talked about, and we can make a nice conversation. Once again, everyone, have a great week, and I'll see you later. Cheers for now.